And if you think about it for a minute, these countries are emerging, into the modern world, and they don't have what we've all got, which is, power lines under the ground from a power generator down the road. And therefore, a lot of these people use cell phones and so forth, but they got no power. And so the demand for solar power, in your backyard type thing is incredible, and it's growing globally. And China, and I've read statistics on it that it's, got every year it increases sharply in terms of industrial demand. Well, we all know the supply demand of silver is fairly tight. Nobody cares, right? Okay. But if all of a sudden this story suddenly gets amplified, in some way, some manner or form, where people suddenly become aware of this unique attribute of silver, which is, been around for a while, but nobody's been paying attention to it. Then you could have this squeeze effect, that's unique. That silver's got this unique thing above and beyond the fact that it's a monetary metal. And I could see silver go berserk at that point with that kind of headline. We've got a target, I mentioned a minute ago that I think silver getting through this congestion zone, it's been in since its May high, 32, now 32 again. Okay. You bust through that and the old intra-month highs 50. Everybody knows about them. The Bunker Hunt high and the 1980, et cetera, the 2011 high. I don't think that's going to pause or be resistance. I think you're going to blow that out, and that's when you're going to get that sentiment. It says, golly gee, why wasn't I awake when this, why did I doubt it? And you get this gush of, I got to own it. It's above 50, breaking out. Well, why didn't you buy it back at, 15, 20, 30? It's at all the layers of buy signals we generated. But I think that gush is occurring. If that occurs, my bet is that the gold near-term target, not a top, just a pause, is likely to be 3,000 to 3,200. Reasons for that are momentum based, and not the round 3,000. There are some brokerage firms I think talking 3,000. They like to talk big, and they say, oh, in 2025. Always looking way out. But I could see us get there very quickly. But on a ratio basis, if gold went to 3,000 to 3,200. Only then took a pause, not a top. I think silver could easily be 55 to 60, meaning be 2% of the price of gold yet again, which is, it's a ratio that silver's had to gold so many times in the last 50 years that it's almost a norm. Okay, it's not abnormal. And then I think maybe you do get a pause, but not at some logical place where everybody says, oh, we're going to pause silver in front of 50 again. No, And I think we built the launch point to blow that stuff out, all the old $50, the Bunker Hunt highs and so forth. And I think it could occur before the end of the year, possibly even before the election. There's a lot of factors underway out there that will impact gold and silver that you've got to look at them and understand, hey, if this happens, that could help generate more power in gold and silver. Few people are talking about the dollar right now. We got bearish on the dollar after its sleepy range for the last year. Since 2023, it dropped from 115 down close to 100, and then went to sleep for a year and a half in like a 5% range, up, down, to going nowhere. It was a non-event market. Major category, foreign exchange, okay? It was a quiet one in the corner. Watch out for the quiet one. It's now just above 100. We got negative when it broke through 104.40. You drop, there's a structure on 10-year average momentum of the dollar index that says when you get into this year, you don't want to see 96 something. You'll blow the hell out of a multi-decade uptrend on momentum. You get into January, that number jumps up to about 98 point something. So literally 2% or so below where you're trading right now. If you're trading there next year, you're going to blow the bridge over the River Kwai for the dollar. Suddenly the quiet one's going to get very noisy. And there's other things going on we know too. The stock market could be a factor.
Now, I know some of you might have felt like you missed the boat during the last precious metals rally. You might be thinking, well, I missed my chance when silver went to $15, $20, or $30. Michael's analysis is here to tell you that the boat hasn't even left the harbor yet. Silver has been consolidating in what he calls a congestion zone, a sort of holding pattern that's keeping the price at around $32 for now. But what happens once we bust through this ceiling? Michael spoke about those old intraday highs of $50 set during the infamous Hunt Brothers saga in 1980 and again in 2011. Many investors see that $50 level as a psychological barrier, a level that's going to be hard to break. But Michael believes something much more profound is at play. Once silver crosses that threshold, the sky's the limit. This is where sentiment plays a huge role. Once we get past that $50 mark, people who have been skeptical are going to kick themselves. They'll be asking, why wasn't I paying attention? Why did I doubt it? This kind of reaction creates a rush of buying activity as people realize they're missing out. We call it the fear of missing out, FOMO, and it's a powerful motivator in the market. If gold continues its upward trajectory, we could easily see silver not only break past $50, but race towards $55 or even $60. And at that point, you're going to see mainstream investors finally wake up. The FOMO will be in full swing, and everyone who didn't buy at lower prices is going to scramble to get in. Let's shift gears to gold for a moment. Michael's analysis points to a near-term target of $3,000 to $3,200 for gold. Now, this isn't necessarily a peak. It's more of a pause, a point where the market might take a breather before the next leg up. Interestingly, while many brokerage firms are projecting gold to reach these levels eventually, maybe by 2025 or later, Michael thinks we could get there much sooner, possibly even before the upcoming elections. What does this mean for silver? Historically, silver tends to follow gold's movement, but with a greater percentage increase. If gold hits $3,000 or $3,200, then silver could easily reach $55 to $60, giving us that 2% ratio of silver to gold, which has been seen multiple times over the last 50 years. This ratio is not something out of the ordinary. It's almost a norm for the relationship between gold and silver. So if you're holding silver now, that ratio suggests significant gains ahead. One of the critical drivers for both gold and silver is the US dollar. Michael touched on the recent bearish movements of the dollar, noting its drop from 115 to just above 100. For a while, the dollar seemed to be asleep, trading in a narrow range with little movement. But as he put it, watch out for the quiet one. When it comes to markets, the quiet phase is often just the calm before the storm. Now, the dollar is approaching a critical juncture. If it drops below key levels in early next year, around 98 according to Michael, we could see a significant breakdown. In layman's terms, that means a weaker dollar, and when the dollar weakens, gold and silver soar. This is especially relevant as it relates to global investors looking to diversify away from the dollar, which will drive even more demand for precious metals. Think of it this way. While the US dollar has been the world's reserve currency for decades, that status is being challenged. Countries are diversifying their reserves with assets that don't have counterparty risk, and gold is at the top of that list. The momentum is building, and a declining dollar could very well be the catalyst that sends gold and silver to new all-time highs. Michael also raised the possibility of $8,000 gold in the coming years. Now that might sound extreme, but if you look at historical bull markets for gold over the last 50 years, these kinds of gains are not unheard of. Past bull markets have seen multifold increases over a decade, and if history repeats itself, we could very well see $8,000 gold sooner rather than later. Let's put that in perspective. If gold reaches $8,000 and we maintain that 2% ratio, silver would be trading at $160 per ounce. Yes, you heard that right, $160. And when you consider that silver is still trading under $32 today, that represents an enormous opportunity for investors. The reason we're talking about these numbers is to illustrate just how undervalued silver is right now. It's not just a potential store of value, it's a potential wealth multiplier.
If you take the swing moves in gold, the past couple bull markets, the last 50 years, and do the same thing again with good $8,000 gold just to match them, in terms of log ratio scale move. Those moves lasted a decade or so. Ours started in late 2015. So, another year or so wouldn't shock me. We're $8,000 or even higher. There's so many events out there that are going on that are fundamental and technical. This time around, it's likely to be exceptionally dramatic. And so, like you pointed out, silver, it did have two intra-month spikes up to $50 at each of those moves. But that was like, thin air last few days. So really on an annual basis, you nailed it. I wasn't even aware of what you showed till we saw it. It looks like an overlay of the gold chart the way you've done it there, which is accurate. And I think silver, if you do a ratio of silver to gold, go back 50 years and let's say every year plot the highest level that silver was in relation to gold during that year on a percentage basis. How many what percent is silver expressed as a per ounce of gold. Right now, silver is like 1.2 something plus, 1.2%. But if you go back 50 years, the number of years in that 50-year period where we've been up to 2% or 3% is almost normal. It's not like an aberration. So good grief, if gold went to even just 8,000, another replica of its prior ratio moves, and silver were to go to 2%, you do the math. Wow. Okay. So silver is definitely the one that we're focused on as for participation. Yeah, gold's the mama market, but silver the dynamics are far greater on a percentage basis. I think there will be probably an event that's isolated the silver. There is one unique attribute of it above and beyond the monetary aspect, and that is its industrial use. You were a very young guy, and I was a young man. Silver industrial use was photography. That's gone. Okay. Now the solar panels. And, if you look globally, if 80-90% of the photovoltaic cells and solar panels are being produced out of China. And I've read, and I don't keep up with the fundamentals that much, but in Latin America, the Chinese have really come into that market to gobble up the silver production. And I've even read that they're paying more for raw silver ore than they're paying in pure per ounce cost of silver. And because it's an essential ingredient in a photovoltaic cell. And its cost factor doesn't apparently impact the overall price of a solar panel. So in other words, if silver goes up, it doesn't discourage people from, consuming solar panels. But they're selling this stuff in Asia and in Africa. And if you think about it for a minute, these countries are emerging, into the modern world, and they don't have what we've all got, which is, power lines under the ground from a power generator down the road, And therefore, a lot of these people use cell phones and so forth, but they got no power. And so the demand for solar power, in your backyard type thing is incredible, and it's growing globally. And China, and I've read statistics on it that it's, got every year it increases sharply in terms of industrial demand. Well, we all know the supply demand of silver is fairly tight. Nobody cares, right? Okay. But if all of a sudden this story suddenly gets amplified, in some way, some manner or form, where people suddenly become aware of this unique attribute of silver, which has, been around for a while, but nobody's been paying attention to it, then you could have this squeeze effect, that's unique. That silver's got this unique thing above and beyond the fact that it's a monetary metal. And I could see silver go berserk at that point with that kind of headline.
Let's continue with the idea that silver breaks through the long-standing $50 resistance. We've already discussed how the break of this level will create a surge of demand as investors realize they have missed the boat. The psychology of resistance levels is important here. $50 is a level where everyone expects a battle. But what happens if silver just blows through it with no pause? Michael Oliver believes that we built a foundation, a launch point that will allow silver to blow right past the old $50 mark. This isn't just a short-term spike that gets quickly sold off, like in the past. Instead, it's the start of a major revaluation of silver, with prices accelerating beyond anything we've seen before. Once silver breaks $50, we're likely heading straight to $60 or $70 with minimal resistance. At that point, the media frenzy will begin. Headlines about silver's resurgence will dominate financial news, and the general public, who have largely ignored silver, will start buying in. This is when things get really exciting because silver will not only be driven by fundamentals, but also by a sentiment-driven rally. If gold is heading towards $8,000 per ounce, and we maintain that 2% ratio that Michael mentioned, then silver's potential target is $160. Now that might sound far-fetched, but if we break it down, it actually makes a lot of sense. The fundamentals for silver are incredibly strong: tight supply, rising industrial demand, and increasing monetary demand as people flee fiat currencies. Historically, silver's performance in bull markets tends to be more volatile and dramatic compared to gold. During the 1970s, for instance, silver vastly outperformed gold, especially during the latter stages of the bull market. This is because silver has a smaller market, and when money starts flowing in, it doesn't take much to move the price. This means that once we see gold making its move, silver is likely to outpace it in percentage terms. Another factor to consider is the concept of catch-up. Silver has lagged behind gold for several years, and the gold-to-silver ratio is still elevated compared to historical norms. This implies that silver has a lot of catching up to do, and when it starts moving, it's likely to do so quickly and aggressively. We touched earlier on the industrial demand for silver. particularly in the solar panel industry. Let's dig deeper into this because it's one of the most underappreciated aspects of the silver market. Solar energy is growing at an exponential rate, and silver is a critical component of solar panels. It's not just China. Countries around the world are pushing for cleaner energy solutions, and silver demand is going to be a key beneficiary. Michael mentioned that China has been aggressively acquiring silver from Latin America, even paying more for raw silver than what it costs in pure form. This tells us something very important. China sees the strategic value of silver, and they're willing to pay up to ensure they have enough for their needs. This creates a geopolitical dimension to the silver market that we haven't seen before. Imagine a scenario where the world's largest producer of solar panels starts stockpiling silver. That's a recipe for a major price spike. Silver's role in the electronics and medical fields also adds to this demand. As technology continues to advance, silver's industrial uses are likely to increase, putting additional pressure on supply. This makes silver unique. It's not just a store of value like gold, it's also a critical industrial metal, which adds another layer of demand. Another major factor that will drive both gold and silver higher is the decline of the US dollar. The dollar's strength has been one of the main headwinds for precious metals over the past few years, but that's starting to change. Michael highlighted the recent breakdown in the dollar index, and if we drop below key levels next year, it could spell big trouble for the dollar. A weaker dollar makes gold and silver more attractive to international investors because these metals are priced in dollars. As the dollar falls, it takes more of them to buy the same ounce of gold or silver, which pushes prices higher. But it's not just about the exchange rate, it's also about trust. The world is losing trust in fiat currencies, especially the dollar, and they're looking for alternatives. Gold and silver are those alternatives. They're real, tangible assets that have stood the test of time. When confidence in the dollar wanes, gold and silver soar. We've seen this pattern play out multiple times throughout history, and we're likely to see it again as the Fed continues to print money and devalue the currency. To wrap things up, we're at the beginning of what could be a major bull market for both gold and silver. We have multiple catalysts lining up: a weakening dollar, rising industrial demand for silver, geopolitical tensions, and a loss of confidence in central banks. All of these factors are creating a perfect storm for precious metals, and investors who position themselves now stand to benefit greatly. Michael Oliver's analysis points to a significant breakout in both gold and silver. We're likely to see gold reach $3,000 to $3,200 in the near term, with a potential path to $8,000 over the next few years. Silver, meanwhile, could be poised to break past $50 and head towards $160 if these trends continue. The key takeaway is this: don't wait for a pullback that may never come. The fundamentals are too strong, and the upside potential is enormous. Whether it's gold, silver, or even mining stocks, the time to get involved is now. As Michael said, once these levels break, sentiment will shift, and everyone will want in. Don't be the one left asking, "Why wasn't I awake when this happened?" Get in now and be ready for what's coming, because this is going to be one for the history books.